Afternoon. How are we all doing? Sorry, slight technical hitch there. For some reason the stream started on a completely wrong stream. Don't know what that was. Anyway, I cancelled that. There's only 3 people watching it. Afternoon, Steve. Afternoon, Tammy. How are we all doing? Let's have a quick look at what's going on. Wrong one. That's not that. That's right. There. Introduce. Sorry, just getting stuff together. So, just had non-farm payroll. The unemployment rate came out at 3.7, so negative for the US. We were expecting a 3.5. We got a 3.7, which means unemployment has gone up more than anticipated. So that is negative US, but the flip side of that is, well, actually, this is a bit difficult to read this one, but typically what you would find with unemployment going up is it makes them want to stop increasing their interest rates. The fact that they've called for a halt in June anyway, I don't think makes an awful lot of difference. But interest rates going up causes higher unemployment. That's what they're seeing, and that's what's happening. So I think overall, that's probably going to be negative US, because it will put pressure on them remaining flat with interest rates, which will devalue the US as everybody else continues to increase. So it should really be negative long term. Whether or not they're going to make any moves on it today, difficult to tell. So we'll see what happens. Other than that, financial juice has crashed. Yes, I am not a bot. Other than that, there's not really been a lot else happening this morning. A lot. So China considers property support package. I didn't see that one, but anyway, there's something about China. Yeah, that was nothing. So there's nothing else this morning, basically, that's been any impact whatsoever. So business as usual. Quick look at the strategies running on with the EA and what they've been up to. ADR reversals banked 0.92 so far today, 3.5 in drawdown. Pound Swiss being the main culprit at the moment. So 1% bank there. H1 banked 1%, sitting in 5. Nothing much else is moving at the minute. It's just been whipsaws today, so pretty much where we were this morning. H4 done more drawdown control on the 4-hour mean reversion and in 12% of drawdown. So getting really stuck. This Aussie dollar, New Zealand dollar, 5%. I'm not going to interfere with this. I'm just going to let the EA trade it. But yeah, big drawdown on that one, 4.5%. Just really not being able to get any fluctuation in that at all. Anyway, and 11% on H1 hedging. H1 hedging is banked 1.47% yesterday, banked 2.66 today, sitting in 11%. So as usual, the H1 hedging set file, absolutely creaming it. Just makes so much money, this set file. It's just so risky. But hey, with great risk becomes great reward. So there you go. NQ, 2 contracts long. Sorry, one sec. I've just got a futures trade on. Stops on that. A little bit too much risk there. Right, there we go. So that's that covered. We've got 2 minutes to the open. So we're going to watch the markets open and look at the breakouts. ADRs today, there's quite a few. We'll go through those in a minute. We'll just watch the opens and then we'll have a look at all the RSIs and the ADRs. A lot of movement on the Australian dollar today. Big moves on the Aussie again to the upside. So Aussie's having a little bit of a pump. New Zealand dollar, not really getting dragged with it either. So just shows you how weak this New Zealand dollar is. Not getting a lot of movement on that. And obviously the US dollar didn't really do anything. So the US dollar's just given a whipsaw. It is starting to drop now. So we should see a pump in the indices today. But we'll see. We may have put all the volume in. So we'll see what happens. But anyway, so we'll watch these three. DAX this morning. So we had the opening range breakout version 2 running on the pre-market. We got whipsawed at the open, took a loss. Took the inside bar break there, TP'd on that one, and then the second one closed out at end of session, which is there. So banked $140 or something this morning, so nothing particularly amazing. Right, we're off to the upside. Holy cow. $1,000, just done. Scalping the NASDAQ. Right. Yeah, sorry. So I've just done that here as well. I was running that trade on this trade manually on a prop account. TP. Done. Sorry, I just got to concentrate on this one because this is real money. One sec. Just adjusting my trailers up. I just made $1,500. Long NASDAQ. So as I said, US dollars coming down, indices go up. So that's hit TP out the gates. We've just hit TP on the S&P, trailed into profit. That's trailed into profit. Dow is the only one stuck at the moment. Doesn't seem to get in any movement on the Dow, and that's just dropped dramatically. So that one's probably going to stop out by the looks of things. See what happens. These two are pumping though. The NASDAQ and the S&P. The Dow's being held down for some reason. We'll have a look at these where they're potentially going in a second. Just wait for this first 5 minutes candle to go in. So that's TP on the pre-market 5 on the Dow. So we're running for 5 to 1 on the NASDAQ. Yeah, so that's 5R, that TP there. S&P's up there. Be nice to do a 5R in one candle, wouldn't it? Let's see. Dow stuck. Oh, right. So the Dow stopped out. So the Dow went short at the open. I didn't even see that. Yeah, so the Dow went short at the open, stopped out on both shorts, flipped long. So this is going to be a break even for the Dow with the 1.5R. The others are profit. So profit NASDAQ, profit S&P. Really wish I'd have held that NASDAQ. Jesus. TP2 hit on the NAS. 2.5K. So there you go. That's TP hit, NASDAQ. Dow looks almost break even basically. So that's 3K so far. Just watch this candle close. Got 1 minute left. So when this candle closes, we should, assuming the EA is trading correctly, we should see that sell stop removed on the NASDAQ. That is complete. Be nice if the S&P can actually stop out on that trailer, because that'll remove the S&P sell stops as well. Oh my God, that's so painful. I just banked $1,300 and I got out at 145.60. Oh, I'm trading futures, so it's different. I got out at there. I got out here, basically the 2 to 1. There you go. They're stopped off. TP hit on the Dow. Dow's trailing into profit. All profitable again. Very nice, and keeps going. So the Dow 2R is 100 and about 120 ADR today. S&P not quite at the 5 to 1, but on its way. Right. Okay, so just want to see this S&P stop out. I just want to make sure it doesn't trigger those shorts. It's going to take a big old bearish candle to trigger those shorts. It shouldn't do, but just in case. Morning, everybody. Sorry, it was a bit quick this morning, wasn't it? Haven't said hello to everybody. Hello, everybody. It's time. Tim the Money, John, morning, CDO, Johannes. On the hedge ADR and mean reversion set files that you run live, you said it is set for a 100K account. What settings should be changed on an account that is not 100K? So the only setting that is not ADR based on all the set files, just watching that, is the position down here. So in the basket, the partial profits and drawdown control. Oh, no, sorry, not that one. In the basket trading settings here, if this set file, this is the hedging one, so this hasn't got it set, but this one here, close all when X money in profit. Yeah, that one there. So anything related to money, the whole EA works on ADR. So your risk is based on ADR, your TPs are based on ADR, your stops are based on ADR, the basket settings are all based on ADR, apart from this one, which is close all when money in profit. So that in the set files is not on the hedging one, but on all the other set files, you will find that you have that as a monetary amount. So in the ones that are published, I think it's $50 or $25 because the initial testing was done on a 1K account. Right? Yeah. So that is set to 250 here, which is 0.25%. Yeah. So basically what I'm saying is when we get into an ADR trade, get me out at 1/3 of an ADR, which is normally about $200. Yeah. If it takes two positions, i.e. the first trade doesn't work and I need to take a second, get me out at either 1/3 of an ADR in profit or $250, 0.25%, whichever comes first. Yeah. So this is this monetary amount here is kind of a backup, because what you'll find is if you're using a lot size multiplier of 1.3, for example, which is being used in this case here, yeah, what you'll find is you'll actually hit $250, which is 0.25% profit, before price moves 1/3 of an ADR beyond your break-even average. Yeah, so that is there to get you out before break-even average. No, sorry, not before 1/3 of an ADR. Yeah. You don't have to use that if you don't want to. It will just get you out 1/3 of an ADR. But what you will find sometimes is you'll have maybe 5 positions on. Your break even will be somewhere around there. 1/3 of an ADR from that, because that lot size is so big and it's done drawdown control here. By the time you get to 1/3 of an ADR, you'll bank something like 2.5%, which you might think, yes, that's amazing. but it might not get to that. It might bounce and disappear off. So what it's set to do is say, when we get beyond our break even, just grab me a 0.5%, 0.25%, or whatever, because the trade's gone wrong. Get me out, but get me out with some money, which will hopefully pay for the drawdown control. That's the idea of that input there. You don't have to use it. You can set it to a 0.5%, which is $500 in this case, but in this case, it's set to a 0.25% because it's the ADRs. If you look at the H1 set files, the H1 set files are set to $500, which is 0.5%. So I'm targeting half of an ADR or 0.5%. Yeah. So that's the only one you need to change that is related to money. Everything else works on ADRs. So we're targeting half an ADR of movement. We're getting in half an ADR or 3/4 of an ADR apart. We're risking 0.25 of our account on half of an ADR of movement. So everything we do is based on ADR because ADR is dynamic and changes. Pips, they are completely useless. Money is useful because we can set this to be a percentage of our account balance, can't we? So in this case, because it's a 100K account, $500 is 0.5%. So I'm saying get me out with 0.5% or half an ADR of movement in my favor, whichever comes first. NASDAQ is still running. DOW is still running. So is the S&P. Yeah, does that answer that? So DOW's running. DOW's hit target. S&P is just about to hit 5R. So it's a 5R target hit there. We're just about to hit 5R. If we don't, we're going to hit 4R. Who cares? What's 1R between friends? 5R is there on the Dow, but that looks like that's going to stop out with a trail. Let's just watch these finish because it's nice to have a glory moment. 3.8 banked so far. 4 grand running. 8 grand target. Done. 1 session. 15 minutes. Thank you very much. I'll be here all week. Wish I hadn't closed it out on my real account. Oh, that would have paid for my holiday. Morning, ninjas. Morning, XR update.news. Who's my broker? A Robo Forex. Afternoon, Brian. So you're using trailing stops on the new version. I thought you were ditching the idea. No. Yes and no. Still testing, to be honest. But trailing stops reduce drawdown, and drawdown is very important on prop. So with a trailing drawdown, on the testing, basically, trailing drawdown reduced the drawdown overall on the account by somewhere between 3 to 5%. So on my own accounts, I wouldn't give a monkeys. On a prop account, 3 to 5% can make the difference between blowing and not blowing. So the trailing stop reduces the drawdown if you're going to get it. So it is worth having. On runaway days like this, it doesn't matter. On days where it doesn't run away, it does actually stop you taking more drawdown. TP here on S&P 500. So that will close out that sell stop on candle close, 1 minute 50. I just about hit ADR on that. This US dollar must be coming down pretty hard. Not. Bit mixed, isn't it, actually? Indices are certainly reacting a lot stronger than the US dollar is. Be nice to look at this. If this Dow hits, this is 3 5Rs in a row. Come on, Dow. Let's finish the game. I'm so sick I didn't hold this. I honestly do feel sick. I'm just watching my chart over here, looking at it going, just made $1,500, $1,350. Looking at it thinking, if I'd have held that, I'd be looking at somewhere between 10 to 12K, which I could have just stopped and waited for payday and draw out. I wasn't expecting it to go this fast today. But such is life. Come on, Dow. do it, is it? 20 seconds. See if we can get there in 20 seconds. I just want to check that this S&P cancels off the sell stops. And then we'll go and have some FX stuff. Not going to hit it. Okay, sell stops cancelled. Cool. Excellent. Done. Very nice. So got $2,000 open running. Bank 6.3. So that's 8.384. Guaranteed 1,600 on top if it stops out the trail. So that's 7,900. So pretty much 8K. That's an evaluation pass. On to funded same day. Very nice. If only every day was like that. We wish. What causes the indices to go up when the US dollar falls? Just the way it works. So to be able to buy stocks, typically you need to sell currency. Yeah. So if you think about what's happening when you buy a stock, yeah, you're buying a share in a company with cash. The cash used to buy that is the US dollar. So when you buy a load of stocks, the stock of US dollar drops. What's called the M2 money supply drops. So you usually find the base currency. So for the DAX, it's the euro. For the US stocks, it's obviously the US dollar. So you tend to find when the US dollar drops, the stock market goes up, and the stock market goes up, the US dollar drops. But it's not always the case because it also matters with what strength there is going through the US dollar in the foreign exchange market as well as the stock market. But typically, when you see a weak, if you look at a chart of the dollar index and then look at a chart of the S&P 500, you typically find they do the opposite. Generally, it's not always the case. It's not. You can't just go, oh, the US dollar's dropping quick, buy the stock market, and vice versa, because it doesn't always work that way. In the same way that you can't always say, oh, look at that for a reversal. Holy crap. Look at that NASDAQ. Okay, stopped out on the trailer on the Dow. So, can't remember what I was going to say then. That's throwing me that. I was saying something about inverse. Oh, yeah. So I was going to say, you can't always say that because the NASDAQ's coming down, the S&P is going to come down. Sometimes the S&P rallies while the NASDAQ drops. If you look at the charts, for example, if you look at the hourly charts, the 4-hourly charts for the NASDAQ and the S&P, these two are usually correlated in the fact that they run together in the same direction. So you see what the S&P is doing over the last month or so, and then look at what the NASDAQ's doing, then look at what the S&P's been doing. Very sideways. So very, very different. The Dow Jones starting to come down. These are usually correlated in line with each other as the US dollar is correlated the opposite way. So it's not always the case. So don't read too much into it. Dow Jones would have just hit target. Okay. So there's your 5R on the Dow Jones. Got taken out of the trailer, unfortunately. Happy days. $8,000. Add that to the whatever we got the other day, which was $6,000, was it, on Wednesday, Tuesday? And then what did we make yesterday? $3,000 or something? $15,000 week. Right. Let's have a look at the FX pairs and everything that's going on over here. I'm just going to catch up with chat first. I mostly like to set manual TP at significant levels when I'm away from the screen or overnight. If I replace the set file with a new one that has a TP of 1/3 of ADR, will it still manage the trade normally? It will. However, so you wouldn't replace it. All you would do is you would go into the set file and remove that set that to 0. You don't want to target a monetary amount. And if you don't want to target an ADR, set that to 0. It will still manage those trades. But when you hit that OK button, you are reinitializing the EA. So any automated drawdown control that you have set will trigger again, because it will go, let's have a look at the drawdown levels. Oh, we're X amount of ADR. So it will start to do automated drawdown control for a second round for you. So just be careful if you're going to adjust things while it's running. You shouldn't really do it. If you're not using automated drawdown control, it doesn't matter. As long as the magic numbers are the same, it will carry on trading exactly as it is. Just be a little careful if you're using automated drawdown control. Burke, I'm back testing with your EA. When the position goes minus, the EA is closing the entire position at once. If you're back testing and it's closing the entire position, then you've probably got the drawdown control settings wrong. So in drawdown control, you need it set per trade. Well, you don't have to. You set it however you like, but I've got it set per trade. Make sure that you've got a -1 or a -0.75 or a minus something. The Dow Jones is flying. And then that is a 0.3. So that is closing out 1/3. You might have it set to 3 or something, thinking that's a third, which is actually 300%. It can't close out 300%, obviously. It can only close 100%. But it'll be in there somewhere in the partial. Go and read the manual about it, and it explains exactly what every single one of those inputs is. Lots of that. EU, we'll have a look at that in a sec. Dreska, afternoon. Hilarious, couple of runs there. What is an R between friends? Between 8K, near. It's all good fun, isn't it, when it's going well? When it's going bad, it's not fun. Take on EU. Euro US dollar. Got no extensions on at the moment, so I've got no bias on it, really. Euro US dollar. Euro should be a long. US dollar, I think, now should be a short. So I would be looking to long it. So pull back and rally. So on the hourly, I'd probably look for a pullback entry. So look for pullback into propulsion at ADR maybe and go long. Possibly all the way back down to here. Don't know, but it's not extended in either way for me. So I'm not in at the moment. Tim, or is there a way to override the EA to take my own TPs if I place them using a set file? Yeah, so basically, if you don't want to use an EA, I think I've probably already answered that, haven't I? You've explained all this after reading my first question. Okay, brilliant. The best thing to do, Tim, right, is to take the EA into the strategy tester and just run it in visual mode. Let it get into drawdown with whatever set file. And then you'll see it basically, if you don't set any basket settings for take profit, it won't ever get out. Yeah. The only time it will ever, or the only way it will ever get out, if the market continues to push against you to such an extent that it does automated drawdown control for months until it's finally closed out everything. So if you don't use any TP settings on it at all, it just will never close those trades. So if you want to manually get out, and I totally get this, it's something I do myself sometimes. Literally all you do is you use the set files, you set it up as you want. Drawdown control, have it automated or not, it's entirely up to you. But with the basket trading settings, if you just remove the target and set both of those to 0, so the profit in percent, so close at profit in percentage of ADR and close in money, if you set all of that to 0, it will never get out. It will just stay in the trades. So you can basically then manually drag your TPs to wherever you want to. So one of the main reasons you would do that, which is actually a really good idea, if we look at pound New Zealand as an example, right? So I've got 4 positions on this. It's told to get out automatically when it gets half an ADR in profit. So half an ADR is 89. So somewhere around 125 ADR is the exit on that. Yeah. If I think actually this looks like it's coming down and I reckon this is going to do the gap fill on the New Zealand rate announcement, yeah, you can just basically turn off or not use the TP settings and just go, right, I'm targeting the top of this propulsion gap. Yeah, with all my trades. So this initial one down here, I will have a loss on it. But all these, so I've got 1, 2, 3, 4 positions on. So these are all targeting that propulsion gap. So instead of banking a quarter of an ADR and taking the entire position off there with $500 of profit, $600, $700, $800 or something like that, we'll take the whole lot off down here for $200, 3,600, 3,800, 1,300 for about 5%. Yeah. And people do this. People have messaged me multiple times saying I've just made 7% on a pair. And I'm like, how the hell have you done that? And basically they just let it run. They're swinging it. So if you reckon this is going to pull back to propulsion, which is a high probability, you know, this is a big propulsion gap target. So this interest rate move was unexpected and probably not warranted. You get down it, or just take it off there. You should take it off at $3,000, couldn't you? Instead of 6 or something. Up to you. But the EA will do what you want. Just set it up to do whatever you want. Will the new version of the RB be sold as a product or an update? Don't know, Evan, is the honest answer to that one at the moment. It's planned to be a new product because it doesn't work in the same way at all as the opening range breakout EA. And I'm not sure I can get this logic working properly in the ORB EA. So it's probably going to be something new. Because it works completely differently. You can use the existing ORB EA just to play the 5-minute pre-market, which is what a lot of people are doing already, including me. It's just I wanted something to try and do loss recovery as well. So I can't get the logic. The logic's totally different. Difficult to explain if you're not a programmer, but it's very different the way that it triggers trades, the way it manages them. I'm back testing with your EA when the position goes minus. I've just answered that one. Afternoon, Mr. Lunary. Welcome aboard. Is this all algo trading or are you trading manually as well? So up to you. I algo trade, but I also trade manually. Go and watch the bootcamp. There's loads of links going along the bottom there. Watch the bootcamp. That explains how I trade. Right. More ADRs just been triggered. So let's get through the ADRs. Is it normal for the ORB EA to trigger a buy limit orders? If yes, it can be. So if you've got a buy limit order, it will be because the market moved too fast. So I'm assuming you're taking the 5-minute ORB today, which is there. Yeah. So that's your 5-minute ORB. Look at where the close of the 5-minute candle is. Yeah. So what would have happened is as soon as that candle closed, the EA would have triggered the buy and the sell stops. However, by the time that trigger had happened and those orders were to be placed in the market, price had moved beyond that high. So what happened is price was up here when the order to get the limit, limit now would have been a stop order in place was already was ready to trigger. So therefore, it places a limit order because your price is above it, isn't it? So in some cases, and today is a prime example of why that would happen, it depends on your broker execution a lot. If your broker executes within a millisecond, it will place a limit order before price gets there. If your broker takes a second to trigger your order, price will be above it. This only really happens in massively fast, volatile markets, and today obviously was very fast and volatile. But you can see the pre-market. So if you look at the candles on the pre-market on all of these three, yeah, that was where price was. That was the high and the low. That was where price was. That was the high and the low. That was where price was. That was the high and the low. So there's plenty of room, basically, to get those orders in before the next candle starts its movement. However, with that one there, that's the high and the low. That was exactly where the trigger was trying to be placed. That's why you got a limit order. Nothing you can do about it. I could code in to say, don't take the trade if it's gone. But I would then say to you, so how would you feel if it placed a limit order, price pushed up, pushed down, triggered your limit, and then flew? You'd be hacked off, wouldn't you? And that happens, yeah? So you'll place your order, price will be doing this for 20 seconds, and then it will go. That will trigger your limit order exactly the same as if it was a stop order. There's no point in putting that logic in, really, I don't think. Right. Let's have a look at these ADRs. So let's quickly look at, actually, before we do that, let's look at potentially where these indices are off to. So we're 125 ADR on the Dow. S&P hasn't got to ADR, and neither has the NASDAQ. No, the NASDAQ has neither. NASDAQ's completely reversed. Total fake move, that, look. So NASDAQ to the downside, your targets basically on that one are ADR, that propulsion gap, or basically back down into here anywhere, really. Let's look at it on the hourly so we can see the levels. So you've got previous day's high and low, and yesterday's low is there. So 175 ADR to the downside are the most recent lows. Upside, we've triggered straight into last month's high and rejected it. So this looks like a double top rejection of last month, which is why that explains why that came down so fast and so hard. So that's coming down fairly quick. Target would obviously be anywhere down there, but I'd go for ADR, which is the previous day's high. S&P, we're out the highs. So downside targets on this one, yesterday's high. This is just a whipsaw today. Look at it, it's awful. So ADR obviously to the upside, I would guess, but not really easy to call any targets on this today, is it? It's just a bit of a mess. Which is fine, I don't care, because I'm done on it. There, obviously last month's high would be your initial target, and then yesterday's high is down there. So if this decided to retrace, if it wants to go long, we've got last week's high and previous week's high coming up at about 130, 140 ADR and 175 ADR on the Dow. Dow is absolutely flying. The other indices have completely turned tail and gone the other way. Look. Not interested. Tricky one today on that. How are you doing the 5-minute pre with the ORB version 1? Literally just said it. Do the 5-minute pre-market, yeah? So this is set to do the 15-minute pre-market as it is. Look, that's the 15-minute pre-market. There's your open. If you want to set it to the 5-minute pre-market, you'd change that 14.15 to 14.25. And that will take the 5-minute candle pre-market. And it will just do exactly the same thing. The opening range breakout EA version 1 will do the 5-minute pre-market. Outro's been doing it for ages. And we've been watching it for ages. The EA will do it for you automatically. You can set 2 trades. So you'd set exactly the same. You set that to 150, set that to 500, set both of them to the 5-minute pre-market, set it to take opening range breakout 1 and 2 only. Go into continuous mode if you want to. Use trailing stops. Set loss. It's very, very, very similar. Except the other version I'm doing is basically set to take inside bars and auto cancel opposite sides. So there's different logic going and there's only one range. So it's slightly different. But you can do it with this already. I know I am doing it with this already. Yeah. So it's the same logic. What charting software is this? MT4. Afternoon dances. Right, let's do some analysis on FX. What a hectic session. I love making lots of money really fast. It's lovely. I wish it was that every day. Aussie dollar CAD, ADRs. So these are your average daily range hits today. 125, almost 150 on Aussie CAD. Aussie CAD highs coming up as well. We've just tapped into that, so it looks like a good rejection. Aussie dollar's been flying today. Target to the downside. It's not extended on the hourly yet, though, so it is an ADR reversal, but you would have been in this already from this morning. So this has already triggered a trade this morning. Back up here. Aussie CAD. The ADRs. Oh, it's out. Is it? What's the date? Second. We're not triggered yet on this. Why is that not traded the Aussie CAD today? Am I blind? There is no Aussie CAD there, is there? That's weird. Why has that not triggered a trade on the Aussie CAD? Bear with me a sec. I'll look into that later. I'm not sure why that hasn't triggered Aussie CAD. For some reason, that's not taken a short on that, but it should have done. I'll have to check. Maybe there's an issue with the data there for some reason. So Aussie CAD, basically, we got the ADR hit here this morning. Reversal alert went in there, so you should have been short on it there. If not there, you would have been short somewhere up here. And obviously at the moment we're stuck sideways. So there is still a reversion opportunity on that one. You're not going to get a very nice reversal alert on this now because of this whacking great candle that we had off of the unemployment rates. So it is still a short though. So looking at this one higher time frame, this is potentially a pullback at the moment on this move still. So still like it's short, Canadian dollar long, based on oil movement, which is still bullish. So we should have a strong Canadian dollar. So when this Aussie has a little bit of a rest, as long as the CAD carries on, we should be looking at a drop on that. So that is like a good short. Should already be in that. Not sure why. Aussie dollar Swiss. Big extension to the upside on this one. So we're sitting up at 150 ADR on this one still. So yeah, massive move to the upside. Completely undone all of that movement. 5-minute reversal alert has already triggered on this one. No, it hasn't. No, it hasn't. So ADR's there. That was your last down candle before the high was made. We never touched it. Made a new high off of the news. So this is your first reversal alert. So you haven't had an entry on this one yet. So there's your entry there. Aussie dollar Swiss for a short. We're up at highs at the moment. We're sitting up at weekly highs. So 2 week ago high. And yeah, so that's a 2 week ago high. Not sure what that line is. I think that's the line I've drawn. on manually. So we are sitting up there, nice rejection off the 2-week high. Failing that, if this doesn't hold and come back down into propulsion, second entry somewhere up at last month's high. We're not going to get there today, but obviously expecting euro strength, Swiss franc strength. So we should come down on that one. Nicely extended on the hourly as well. So that's an hourly entry. So I'll be taking the next M5 reversal alert on that as well on the H1 M5 short. Aussie dollar yen, big extension to the upside, straight into with weeklies. So there's your last week's high, 2 week ago high, monthly high is the purple line. So we're up right at resistance. Massive move, no profit take. So yeah, big propulsion gap target at 100 ADR back to the downside. So if we're going to put in a low, high, higher low, that's where we'd look for a pullback. Extended as well on the hourly. So again, that'll be ready for a short as soon as you get the reversal alert. M5, your reversal, that's quite tight on that. So there, very nice entry. Straight off, we've tapped into this and tested this now twice. Look on the 5 minute, this weekly high, they can't get through. So if they can't get through, they'll give up. They'll start taking profit on the move. You get the reversal alert, and then it should come down from there. So that looks good. Aussie dollar yen. I like everything short against the yen as well. Aussie New Zealand. This thing's nuts at the minute. Won't stop. 3 shorts on this on the hourly. Just not coming down. So Australian dollar suddenly found a load of strength. We are above, way extended above the ADR level. So good looking short opportunity. Your next reversal on this one is going to be fairly far away, all the way back down here, which is that high. So there is a possibility you might jump into that and hit resistance, hit support and bounce off again. But if not, watch that level and then coming back down to here. So if you look at it on the hourly, this propulsion gap here, that high, that's yesterday's high. So that's where potentially you would come down to. So there's plenty of room for a scalp on it, but you're quite possibly already in it on the H1 M5 mean reversion. Aussie dollar, US dollar. So got one already on this one, which was taken this morning, and since then it's pushed up above ADR. Again, whipsaw on this. It's just a massive whipsaw. Look, double-ended stop run today. Took out the lows, took out the highs. We've just reset, sit in the middle. May not go anywhere this afternoon, but that's a nice short. Your reversal alert on that one is just hideous. It's just a mess because of the whipsaw. So officially, it's a break of the low from the news. I would say that level there, really, if it breaks down below that, that's probably safe to get in short, but it's not very pretty at all, that. Euro odd, extended to the downside on the Australian dollar move. Again, 125 ADR. You've already had a reversal alert on this one, which was there as an entry on Euro odd. So that is last week's low. And we've got the previous week's low there as well, and the monthly low. So we looked at this one this morning as a bounce, didn't we? Propulsion gap is now filled. 175 ADR is last week's low. 225 ADR is monthly low. Hasn't done a profit take at all. So this is 2 days solid straight down. The euro is just not able to get any life, no matter what Lagarde says. Lagarde was talking up yesterday, and it's still not moved. So push back up into propulsion there. That's your last support, which will turn back into resistance. Nice propulsion target. So get in, get out when it pushes up. Need to wait for a reversal alert on that though, which is 50 pips away, which is half an ADR. So you've got half an ADR movement back to the upside, and then push from there back up into here, which is 83 pips. So there's easily a third of an ADR, half an ADR movement to the upside in it. Lots of room. Pound odd also extended to the downside. That's going to be the same as the euro odd, pretty much 2 days straight down. We've got this support coming here, which is just beyond 150 ADR. So if we got down to there, that would be a nice area to buy it up. It did bounce off of there already, off of 150. Look, straight off of 150. However, it's still coming down. There's one buy on this already because it's extended on the hourly. We've had the reversal alert on it already this morning, or this afternoon rather, which was there. So that was your first reversal alert off of ADR and the H1 RSI extension. And then we obviously had the whipsaw on the news, and we haven't gone anywhere since. So we're just sitting within the news range at the moment, not going anywhere. Might not go anywhere today. The indices certainly aren't doing that. NASDAQ's just pulled straight back into the original range. NASDAQ's just pulled straight back into where we started. Literally done a whipsaw. They're clearing the decks for something. They're going to move. So that's pound odd, and New Zealand dollar Swiss is the other one. So that's your other ADR reversal. This one's come straight off of ADR today, or rather the news spike caused an ADR hit, but you can't get in because obviously it's all the way back down here. So we're just sitting there. Very difficult to get in some of these today because the ADRs have been caused by the news spike. So therefore your reversal is just mess. So it's very hard to get into anything. Same with the hourlies. So the hourly RSI extensions, there's lots of these today, as you can see. A lot of them caused by the Australian dollar. So Aussie dollar Swiss, that's up at that lovely resistance level. But again, because of this big spike a couple of hours ago off of the unemployment rates for the US, it's going to be quite hard to get the reversal alerts on them. But when they do trigger, they're good looking shorts, obviously nicely extended. So we're just looking for that pullback into propulsion. There's 3 big targets to the downside to go for. Time series SSC Mumo, I think that you can emulate it by attaching the EA in 2 charts on the same instrument and allowing only longs in one instance and only shorts on the other. No, the opening range breakout EA does that. That's exactly what it does. It places a buy and a sell. That's the whole purpose of it. It doesn't know which way it's going. So this does it already. You don't need to attach it to 2 charts. Just use one. Shorten, what would the win rate of the position trading strategy be if we used a 1-to-1 with a stop loss? No idea. Go and test it. Download the demo of the market reversal alert CA. Stick it in a strategy tester. Set it up as you want to trade. You tell me. I don't use stops. So therefore, it wouldn't be a position trading strategy because it would use stops. Stop losses you don't use in position trading. Dances, English breakfast is the best. Not sure if people in England cook it like that every morning. No. Isn't it nice making that sort of money by? That's basically, if I'd have held those on the account, that would have been me done for the month. Well, on the 2nd of June, I'm quite happy to walk away with 12.5 grand. Didn't let it run. I like money too much to be able to take risk that much, especially with the NASDAQ. By the way, I really wish you stuffs were available in MT5. Everything's available in MT5. Everything I make is available in MT5. I don't know where you get the impression that it's not, but every indicator I have ever produced and every EA I've ever produced is available for MT4 and MT5. But I really wish you wouldn't use MT5 because it's crap. Use MT4, it works much better. It's stable, it doesn't break, they don't update it, it's just the best. Mumo, just curious, in general sense, does the pre-market have an edge over the 5-minute breakout? They're different. They're just different. Basically, the pre-market edge is a scalp. Yeah, the pre-market, you're basically taking the initial cash balance candle. The opening range breakout strategy was initially designed to use the initial cash balance as the range to break for the day's trend. But obviously the pre-market, you're taking a scalp as the initial cash balance goes in. The whole advantage of the pre-market is that initial cash balance candle is very often a 1.5 hour. So literally that first 5-minute candle, as you saw today, it's just done. That's it. You only need one trade a day. If you risk 1% of your account and you get 1.5 hour, 20 days, you can live on that. Anybody can live on that. You get 100k funded account, you're generating 10 to 15 grand a year, a month. You're not. More like 5 to 10 grand a month, but is that not enough? One trade a day is all you need if you're high risks. So what I'm trying to do is develop that to have a loss recovery system. But days like this, you don't need the loss. You know, there's no loss to recover today, is there? It's just in and out. This morning there was. The DAX did it. Look, the DAX failed. We had 2 stops this morning, and then it did loss recovery after the initial break. So what it basically did, in effect, is it traded the pre-market. Then it went, oh, that didn't work. Let's trade the opening range breakout strategy. That worked. So this is a hybrid of the two, really, isn't it? If you think about it, what I'm doing. I'm just trying to smooth out that profit curve. So Aussie dollar Swiss. So that's extended on the hourly and extended on the 4-hourly. We're above the 80 now on the 4-hourly. So if you have a look at the amount of times we get extended above 80 and below 20, it's not often on the 4-hour. So there's a couple of instances there. There's a few instances actually to the downside. Upside, we haven't really. But so when we get this extended on a move of that much strength, the pullback is always waiting. So can't really see that one, but there is one there as well. So yeah, really extended to the upside, and we're in a downtrend, and we're expecting euro strength, which will power up the Swiss franc. So this looks like a lovely short opportunity on the hourly and the 4-hourly RSI extensions. And we're up at a weekly support, and we're at 150 ADR. How much more confluence do you want to go short? There's been no profit take on the move so far. It just looks beautiful. So jump down, M5, take that reversal alert, and just wait. Aussie Swiss, Aussie Yen, we've covered this. This is an ADR reversal. It's also extended on the hourly and the 4-hourly. Big propulsion targets to the downside. We'll come back to those at some point. Aussie New Zealand, we've covered. ADR reversal. H4 extension, this one, not an H1. Extended and embedded. Already in this one, as you know. Waiting, still waiting. This thing's just parabolic. This is the worst thing to get into. Aussie New Zealand. When one of them, as we know, if you were here with me before Christmas, you know that when you get in wrong on the Aussie New Zealand, it can be very painful. We took a long there. Ouch. We had an exit there though. Yeah. So this is the inverse of basically what could potentially be happening here. However, this was a fundamental shift. This is not a fundamental shift. This is going the wrong way based on positive news for the New Zealand dollar. So this is why I don't believe this is the actual move. I believe this is a fake move. We are going to continue, I think, in that downward channel, in that downward trend. But we will see. So this is massively extended. The problem with the Aussie New Zealand is these two move together. So when you get a move that's crazy like this one, when we get the New Zealand dollar powering up, i.e. everything else coming back down against the New Zealand dollar, the Aussie dollar won't, because the Aussie dollar gets dragged along with the New Zealand dollar. So what we need is an inverse negative news and positive news for the Aussie New Zealand somehow, which is tricky. So we're likely to do this for a bit. So this is probably going to need aggressive drawdown control done on it. I'm going to wait until we get to that monthly high. I don't think we're going to get there today. It's probably going to be next week. If we did get there today, I'd be in like a shot on that, put that high, because we're probably going to get a fairly strong reaction off of there. But that's where I'll be looking to take aggressive drawdown control. We've got 3 positions on at the moment. We'll have 4 on by the time we get there. So, but that's extended and embedded. Again, if you go back and look at how often we get embedded like this on the RSI, it's not often we get stuck like that. You know, it doesn't really tend to happen. Whenever we do get stuck like that, there is eventually a move to the downside, because the market's got to take profit. It's got to take profit on that move. They're all sitting there at the moment, rubbing their hands going, look how much our P&Ls are. If they want that P&L realized in spendable cash, they've got to go short. Otherwise, they can't get out their positions. So we're just waiting on the squeeze on the Aussie New Zealand at the moment. And Aussie, unfortunately, today has decided to have a push day. Again, just as the New Zealand dollar starts to power up, the Aussie decides to do the same thing. It's just the same. These two move together. Same as the Euro Swiss and the Euro Pound. It's just one of those things. CAD Swiss also extended. Oh, sorry, Aussie US I missed out. That's 4-hour and hourly extension as well. So that's extended on the hourly. That's already rolled over. So one on that already. As you can see, that's off the hourly RSI extension. 5-minute reversal alert was this morning. Somewhere down here. There it was there. And it obviously pushed up with the news, and then we had the big spike. CAD Swiss extended on the hourly, just about, only just extended on the hourly now. It's not extended on the hourly now. It's just come out of extension. Looks like it's just starting to get back up there though. But the 4-hour is extended. So big, strong push. We've broken out of this high. So we got up into this range, which we tapped into, flagged and broke. So it looks like it's going long. The Canadian dollar will power up with the oil. Oil, as you can see, is rallying. That's why that's moving at the moment. The Swiss franc is losing strength with the euro. So again, perfect storm scenario at the moment. H4M5 already in it. Hourly, haven't had an extension. We did get an extension just about there, but the reverse alert triggered before the RSI extension came in. So we didn't actually get the trade on, unfortunately, on it. The EA didn't get the trade on. So you would have been out on it anyway. We looked at this morning. But big extension on the 4-hour on the CAD Swiss. So again, big move. We have had a bit of a profit take on this, 50% move-ish, or 38, depending where you measure it from. And another profit take there. So it is orderly on its way, unfortunately. So it's just a case of stuck in it a little bit. It will come down at some point, though. The Canadian dollar will weaken, or more likely, what we'll see next week is the Swiss franc powering up on the news. Euro odd. Perfect storm. Euro weakness, Australian strength at the same time. This thing's gone parabolic, straight down into the 72 moving average. We're down at weekly lows, and we've got that monthly. We've looked at this. This is an ADR reversal. It's a 4-hour RSI extension, and it's an hourly RSI extension. It's just parabolic. So the bigger the move to the downside or upside, the bigger the pullback. That's what we're going to get inverse. So you're waiting. Just make sure you're scaling in not too close together on this. You can see on the hourly, I've got one trade on this at the moment there. It hasn't given a signal to go long again yet. So we'll get in when it does give a signal. Wait for the buyers. So don't get mad on it, but the next reverse alert that goes in should signal a second entry. It's about 75 pips. So we're sitting at about 80 pips at the moment. So the next reversal alert, depending how tight it is, not going to be tight. What we need this to do, what I need this to do, is make a new low, and then the EA will move the entry back down to here. That will be the second entry. That will bring the average into there. And obviously, as soon as that pullback starts, we'll be able to get out. But yeah, real extension on that, on the hourly, a little bit embedded now. And the 4-hour, we're just coming down like a loony, isn't it? But it's long. Euro should be long. Again, interest rates, ignore it. It's not right. Interest rates are bullish. Lagarde's come out and said we got another 0.5%. Inflation's not where it needs to be. They will be putting interest rates up. That will boost the euro. At the moment, though, the market's just scaling out of its overestimation on the interest rate rise 2 weeks ago. So that's euro odd. Euro CAD also extended on the 4-hour to the downside. Opportunity to get in there. There's no real stopping point on this that's obvious. Again, weakness in the euro, strength in the CAD on the back of oil. Just coming down until that wanes, and it will. It's just a case of waiting. There was a long opportunity there on the hourly, on the 4-hourly. So that would have been your initial entry on this one. So you'd be in a couple of positions at the moment. So First entry, second leg down, second entry, sitting sideways. This is what I mean with this 4 hour at the moment. This is one of the reasons the 4 hour strategy is stuck at the minute in drawdown. And it can't get out, and it's having to scale out of these positions, because what we're getting is push, accumulate, push, like here. Whoops. Push, accumulate, and these accumulations are lasting for a week on some of these things, and then it's not doing anything but pushing again and then sitting there. So there's just no pullbacks. There's no market structure. It's literally that, which is utterly useless to us, because if the market's not going to take profit on the moves, we can't get out. So there's a lot of these kind of really shallow squeezes, and the hourly, as you can see, the hourly got in and out very easily. The 4 hourly can't, because it needs to get in slower and further apart. It's just not getting enough movement in the market. The market's fast, nothing. Fast, nothing. That is really not good for position trading strategies. The H4 is showing its kind of weak spot at the moment. So that might well have them losing. I mean, last month it banked nicely. We did 15% plus. Just stuck at the minute. So it might turn into a losing month overall. We'll see. It's only the 2nd of the month, though. Plenty of time. And all we need is literally profit take and everything's out, isn't it? Pound odd. That's just started a new position. Big drop again. Pound odd. We've looked at this one. RSI extension extended on the hourly, not the 4 hourly. So good spot. Love it to come down just beyond 150 ADR. That would be really nice for initial entry on it. I'm already in, or the EA is already in on that. So that's a long. Pound Swiss. Whoops. What did I just do there? Put a TP in place. Pound Swiss. So that's just starting to roll over. We had a break even on that today. It's coming back down into here. I'd be surprised if it doesn't actually come back down into there. Just again, same thing. Euro and the Swiss just getting trounced at the minute for no real reason. There's no reason why we should be seeing this much weakness in the euro. The pound, yes, but when you got this much weakness in the euro with the pound, obviously it's just gone nuts for 3 days. So we're looking for a 50% pullback on the move, which is back into that propulsion. That's out. So it's on its way. So this is potentially peak formation high, low, lower high. All we need is a lower low. And then obviously it can go on its merry way for all I care. I shall hopefully jump in it long. But just waiting on that one as well. That's coming down very nicely at the moment. And US dollar CAD is the other extension, which is to the downside. Reversal out on the hourly. Only one position on that on this extension so far there. This yesterday move, I just don't get that at all. It was obviously to do with the Canadian dollar and the oil movement yesterday, but why the US dollar weakened so much to let this down, I don't know. But this was 225 ADR yesterday. So 150 pips on a 70 ADRs. Big move. So especially the day before non-farm payroll. So I was expecting either that or a big strong move today. We literally have got nothing. So the market's just not interested. It is a little bit bullish at the moment, the US dollar, off the back of the news, which it shouldn't really be because the news was negative. However, it's having a little bit of a rally off of it, which is fine. But I'm not really that surprised that we didn't get a huge drop on the US dollar because it done so much yesterday out of money, basically. But we'll see. So US dollar CAD is another H1 M5 already in it there. So just looking for a push into propulsion somewhere, although, you know, valid all the way back up to there, isn't it? Yeah, that's your resistance. Turn support, turn back resistance. If it's going to stay range bound like this. So the oil move at the moment, though, is bullish, which means bullish CAD. So this is why this isn't moving anywhere particularly, because obviously the Canadian dollar is strong off the back of oil, which is holding the US dollar down, even though it's trying to rally. So if that oil suddenly turns around and drops for a couple of hours today, we'll probably find we get a pop on that, which might even give us an exit today. But it's going to need to get up to ADR. Half an ADR on this is 34 pips, which is basically 125 ADR, which is 2 week ago's low. Sorry, that's last week's low. So there you go. There's all your ADRs and RSIs. Very weird movement this week, all over the place. But movement's movement. Movement makes money. Dances with Wolves. Market reversal alert and propulsion candle indicator and ADR indicators are now available for MT5. Yep, they have been for about 2 years. Always have been. Day one, very first market reversal alerts indicator, this one, I released on MT5 in 2020. November 2020. Yeah, 3 years ago. This has been out on MT5 for 3 years. I don't know where you're thinking it's not MT5, but all my indicators have always been for both platforms. I just use MT4 because MT5 is crap, in my opinion. So I just use MT4. That's why I don't show MT5, because I don't use it. I think it's awful. But they've always been there. But only 10% of my sales and demo downloads are actually less than that. No, tell a lie, actually. It's crept up a bit. It's about 15% now on MT5. But always historically, it's been 1 in 10 people use MT5. 9 out of 10 people use MT4 because it's just better. It's been around for ages. It's solid. It's stable. There's millions of indicators available for it. It's just brilliant. MT5 is just buggy. The user interface is crap. It's just no reason to use it, which is why everybody uses MT4. Or rather, what they do is they get MT5 because their broker uses it or forces them to use it, or they download it from the MetaTrader and they click the MT4 button and it downloads MT5 because they don't want to use MT4 anymore, but they can't because their entire business runs on it. And then they go, God, this is crap. Let's try MT4. Oh, that's better. So everyone switches over to MT4. I don't know. I've certainly always had MT5 versions. They just aren't as good. Thinking of your pension, Steve? Oh, you need these indicators in TradingView. Can't be bothered. I could do. The trouble is, what I would have to do, Steve, is spend an awful lot of time and money building everything for TradingView, and they don't have a proper marketplace I can sell anything through and get paid for my time. That's why I've never even looked into it. If they developed a marketplace which protected and secured everything, I would. But they don't, so I don't. That's the honest answer. And I don't use it, so I don't need it. I need the indicators for MT4 because that's what I use as a platform. I just don't code in it. I don't use PineScript at all. So I'm not, it's just not my bag. Other people have made indicators similar in TradingView. Probably because I haven't made my indicators in TradingView. They go make them themselves. I don't know if they're any good or not, but time series. If I understand correctly, the ORB places pending orders on both sides, and once one is triggered, the other is cancelled. That is why I recommended him to attach the EA on 2 charts to avoid the cancel. Yeah, but why do you need to do that on? It's up to you if you want it to do that. I mean, basically, you've got continuous mode, so it will continuously get you back into the positions. This is the thing. The difference between the new version of the EA that I've made and the old version of the EA I've made is a slightly different way of doing the same thing. There is no right or wrong. And this is the thing you got to understand. Initially, all it did was that. Then I added that. But the other way I could have done that was to automatically replace pendings on a stop. But I decided not to do it that way. I did it that way. It can't have one thing that does absolutely every single version because there's just too much in there and it's too confusing. But at the end of the day, both of these EAs will trade the same type of strategy in slightly different ways. The profit curves will be very similar. So there's not a lot of difference in it. Pound odds just hit 150 ADR. That means that pound New Zealand's probably pushing. Oh no, it's coming down. So they are very, very similar. But there's no real right or wrong. Both of them work. The opening range breakout EA and the strategy works beautifully. You can trade pre-market, you can trade post-market. The way that it places orders, if it doesn't do it the way that you want it to do it, the new version that I'm building will do the same thing in a slightly different way. But to do it in the way that it needs to be done on that one, really difficult to shoehorn into the old one. And I'm not even convinced this one is 100% yet. I still haven't done all the back testing on it. It looks good on paper. It's looking even better on paper. January, February, March, April, May. That's only 5 months of testing. That's even better. Drawdown's smaller as well. I'm just literally, while we're talking about it, I'm just running a test as to whether or not deleting the pending orders is better or worse. And it looks like deleting the pending orders is better, which is the way that the old version of the EA works. There's so little in it, really is so little in it. The whole edge of the strategy, whether you use the existing ORB strategy or you use the new version, the way of getting in, the whole edge of it is it either goes like it did today and it banks a fortune, or it does that. What I'm trying to do is minimize the losses during that part and recoup those losses afterwards using a different entry strategy. So if I can't find a way of making that way of trading better than the original opening range breakout strategy or EA, then there's no point, is there? So I need to find something that gives a better drawdown and higher profit, i.e. better profit factor, return on drawdown. If it doesn't produce a better profit factor or return on drawdown, might as well just stick with this strategy because it's still going to have losing runs. But what I'm trying to do is I'm trying to iron out. Let's just run this one so you can see. So I'm just trying to iron out the profit curve because the old version of the EA or the existing version of the EA has a very long stagnation period at points because the market just goes flat. The stock market goes quiet and it does this for weeks on end. And because there's no volume and no volatility, it's hard to make an opening range, any breakout strategy, full stop. Any trend strategy or breakout strategy in a range-bound marketplace doesn't work very well. So what I'm trying to do is find a way to make money when we go into this period that flattens this stagnation out and makes the curve go a little bit more like that, a bit quicker. That's really all I'm trying to do, is just improve the strategy. It works absolutely fine. The edge is there. I'm just trying to make the edge a little more sharp, if you like. Might not be able to, but you see this stagnation period here, look, from there to there. Didn't make any money. I don't know how many days that is, and then we had a day like today. And then we had a few days where it was pretty good. Still being pretty good. Still being pretty good. But then you will get a point where the market goes quiet, which is just what it does. Yeah, accumulates. So when you look at it on any time frame, you will see propulsion, accumulation, pullback, accumulation, propulsion, whatever it wants to do. These are the periods the edge of the strategy plays out. Like today, made 8 grand in 15 minutes. Done. Tomorrow is Saturday. Monday, it might make a loss of 3 grand because the market on Monday might go like that. Yeah. If it does and it struggles, what I want to do is look for an opportunity to try and get as much of that back as we can before the next session starts. And this is what this version of the EA is trying to achieve. But it can't work in the same way as the other one because it's just a totally different logic. This profit curve's nice. But we still got stagnation. You are always, there's no strategy on the planet that does not have a stagnation in its profit curve. Just doesn't happen. Because there's no strategy that works in every market condition. There isn't one. This is why people buy EAs and they try strategies. And as soon as they try it, nothing they've done in the past works for them, because what they're doing is they're executing the strategy that worked really well in the trending market. In just so happens when they start, that 2-week period is ranging. Doesn't make money. They go, that's crap, throw it away, system hop to the next thing, which looks like it works until they try it, because they're trying it in a different period of time when it doesn't work. When you understand stagnation and you understand there are periods of stagnation in a strategy, this is a big long stagnation, you don't mind, because you know that the edge over the period of the year is going to return you a profit. You're just not going to get it every day. But there are ways to the downward parts of the curve, flatten those out. Yeah, and that's what this is doing. But look at that. So this is trading over January, February, March, April. This is trading over 5 months. So we had a profitable month, a slightly profitable stroke break-even month, a very nice profitable month, and a 2-month stagnation. This is one instrument, though. This is the DAX. If you run the same thing on the NASDAQ, the S&P, and the Dow, i.e. running 4 instruments, not all 4 of those are going to stagnate at the same time. As we've seen today, the Dow did that. The NASDAQ did that. Yeah, Dow killed it. Or they all killed it today, but the Dow could have killed it. The NASDAQ could have gone into that and made a small loss. So when you combine those 4 equity curves together, hopefully what will happen is when one is rallying and the others are stagnating, and then when this stagnates, the others rally. And what you end up with is a profit curve that looks more like that. That's what I'm trying to do, flatten that curve by using a sort of loss recovery mechanism within the opening range breakout strategy. Only when it doesn't work, though. It works 3 out of 5 days. So it's those 2 that I'm just trying to squeeze a little bit more money out of. But like I said, it might not work. Today it certainly did, didn't it? The whipping post. I'll be removing Aussie dollar, New Zealand dollar from my watch list. Don't be nasty to Aussie, New Zealand. You say that, but were you here last year, literally for the entire year last year, and I'm talking from January to September, October, right? For that entire period in the live rooms, all we did was long this and make an absolute fortune for an entire year. So if you remove it from your watch list, you're going to miss this year when it does this. Don't get cross with an instrument just because it's not having a good day. Yeah. Aussie New Zealand is having a bit of a messy squeeze at the moment. But when this messy squeeze is finished and you've banked 0.5% or 1% on it, for the next 3 months when it just does that, thank you, and banks 5% over a period of 6 weeks, you'll miss it. Well, I can understand why you might want to get rid of it, because it is a bit of a bugger when it wants to be. But like I said, there's no fundamental reason for this. So I think this is catching a lot of the market underhanded at the minute. What's the time? 4 o'clock. The ORBA, what would be the recommended daily max stop trading loss for prop? Is 1% too conservative? Yeah, 4.5% is your max, isn't it? That's what I'm using. If you've got 5% daily loss limit, 5%. That's it. You're not allowed to lose more than 5% a day. So set your max to 4.5 grand is what I'm using. So it will stop at 4.5. In relation to ICT SMC, couldn't you position trade SMC entries with no stop losses? I don't know, because I don't know what it is. SMC is just complicated. It's far too complicated. I don't know. You could do. I mean, you tell me, John. Can you position trade SMC? I don't know. People think I am an SMC trader. I don't know. Smart money concepts. What is it? What's smart money? Tell me what smart money is. If you're talking about the banks, that's exactly what I do. I follow the bank's footprints. Because I can see where the banks have made movements from. I can tell you exactly where the banks have been buying. They've been buying here, been buying here, they've been buying here. They sold it here. Is that smart money concepts? All SMC is a rehash of everything that I've ever learned in 15 years. I knew about smart money concepts 15 years ago, before anybody even knew what the terminology smart money concepts meant. It's called support and resistance, and it's been in existence forever, as far as I'm concerned. Yeah. What? I don't know. This is my old bugbear with this whole concept of smart money. There is no such thing as smart money. People are assuming it's to do with, I've got a special secret source that I know the banks do that no one else does. You can see in front of you, anybody with half a brain can see in front of them what the banks are doing. What are the banks doing here? Buying. What told you that the banks were going to go long from there? Nothing. There's nothing that told you that until it had done it. Then you knew it was going long. There's nothing that can predict the future. Smart money concepts are, we've got a strategy that's better than everything else because why? What does your strategy on smart money concepts tell me about the future movement of price that I can't predict myself? Which is nothing, because I haven't got a crystal ball, I haven't got a time machine, and neither of you, and neither is AI. Smart money concepts have no way of predicting future movement in any way more than a bank has. Barclays lose money in the markets because they can't predict the future movement of HSBC and Citibank because they've got no clue what they're doing. So not even the banks are smart. And if smart money concepts are based on banks, it's dumb money. The only smart money is the person that enters into the market and doesn't place an order in the market that is not smart, i.e. a stop loss. As soon as you place a stop loss in the market, you, as far as I'm concerned, are not very smart, because what you've just done is place something in the market to say, lose me money. How clever is that? Let's get in because we've seen a double top. Is that a smart money concept? If it is, it's called a support and resistance bounce. It's been traded for around about a decade before smart money concepts were even invented. Larry Williams wrote a book about it in the 70s. Smart money, it's what we trade. It's just what the market does. It moves from support to resistance. This, I'm pretty sure, is a smart money concept called a stop run. They're taking liquidity from people that have done this. Possibly. What I call it is a resistance bounce or a double top. Go and look up the terminology double top. You'll find it in books published in the 1940s. Not smart money, it's just what the market does. That is a liquidity run on those lows. It's a double bottom bounce. Support and resistance. No, it's not. It's supply and demand. All right, call it what you like. It's basically market movement, market structure. Why I call myself the market structure trader, because I just trade what the market structure tells me to trade. When it goes down, it goes back up again. So after it's done this, I've got an indicator that tells me it's done that. Therefore, I know it's going to do that next, because that's what it's been doing for the last 100 years. Am I a smart money concept trader? I don't know. I'm certainly not ICT. I think that's what most people just have decided smart money is, isn't it? I don't know. Sorry, if you're new in here, John, I'm not interested in anybody else's opinions on courses and stuff, because it's all the same stuff. Everybody's teaching you the same stuff, except everybody else is trying to sell it to you. Stuff we've been doing for years. The NASDAQ's just entered straight back into the middle of where we started. So literally, NASDAQ is a whipsaw today. Absolutely gone nowhere. But if you're a smart money trader, it's done a stop run to the high, a stop run to the low, and reset. Does that help you know where it's going next? Certainly didn't help me. Sorry, it's Sarcastic Friday. Just got funded with the fivers. Good job, BMAC. Now try and keep it. Exactly. Yeah. Well done. Good job. How did you do it? Are you scalping, or I presume it's some kind of stop strategy if it's prop? But again, you know, that's why you have to use stops in prop, don't you? Because they don't want you to trade the way that the banks do. Because if you traded the way the banks did, you'd make money. That's the problem, isn't it? Business model is not making money out of traders. It's making money out of evaluations. If they let you trade how the smart money actually trades, i.e. position trading, dollar cost averaging, then I should call myself the smart money concept, shouldn't I? Position trading is the smart money, in my opinion. Only because I've tried everything else and it didn't work, so it wasn't very smart. That double top should be called buy-side liquidity. Yeah. It is true. This is the thing about it. It is true. What these terminologies are, this buy-side liquidity, sell-side liquidity, is correct. The orders are sitting down here and here. Yeah. The banks know where the liquidity is to complete their orders, so they reach for it. My problem with it is, why does that make you think it's coming down? That's the thing, right? So my problem with all education really is you have invented a concept which is price will move up and 50% of the time it'll come back down again. I can flip a coin and get exactly the same result. How is it smart to go from liquidity pool to liquidity pool? We know it does that. I can see it on my chart. It's been doing it for decades. Look. Moves up, moves down, moves up, moves down. We call it market structure. It's moving from liquidity pool to liquidity pool. There's liquidity under there. Did it bounce back from there? God, no. It collapsed by an ADR or two. That's not very smart money, is it? Because it couldn't predict the future. Smart money concepts said it should have gone up. If smart money concepts worked, what would happen is the market would do that for infinity. But the fact that the market does that sometimes it does that, and then does that, means that smart money concepts can't work. Because if smart money concepts worked, it would always take liquidity and then drop, and then take liquidity and pop, and take liquidity and drop, and you'd be forever in a range. How does it help you? This is my bugbear. It doesn't help you predict the future. Nothing does. So how's it smart? No one's been able to answer that question to me, so I'm just assuming everybody agrees. And yet everyone still comes in and talking about smart money concepts as if it's smart. Damn, past the 5%. You've passed the 5%. What's everybody doing on the 5%ers? You've passed the 5%ers as well. Good job. My strategy helped a lot. Best profit was 7% a day during the evaluation. I presume that was opening range breakouts then. Propulsion gap equals fair value gap equals imbalance. Yeah, exactly. Equals wide range bar. This is the whole thing. This is what I've said it in here many times before. What I call a propulsion gap was invented by a guy called M.A. Perry back in the 1970s. He called it a wide range bar, WRB. ICT took his wide range bar and called it a fair value gap. I call it a propulsion gap. Others call it an impulse candle. Others call it an imbalance. All it is a bank order to go long. It's not smart. It's a bank order. It's a historical candlestick that tells me the banks have moved up. I know that. I can see it. It's gone up. But why would you rebrand what somebody invented in the 70s as a smart money concept? It's just to sell a course. This is what happens in this industry. We rebrand things. The same thing. We used to use support and resistance. Support and resistance has been around since I've ever looked at trading. The first ever course I took was a support and resistance course. It taught me about price action at support and resistance. PASR. There's a guy on Forex Factory called Strat who teaches PASR. I learned it before that as support and resistance and candlestick patterns. Some bright spark went, no. We'll put a block around it and call it supply and demand. And then someone said, when it breaks above the supply and cools that down, we'll call it an SMC. It's just a line price moved to previously that it came back from. Nothing clever about it. Not smart. It's not clever. It's not dumb. It's just an area of price. And the odds of it doing that or that are 50%. I don't know. Maybe I'm just being stupid, but Swiss yen ADR. Oh my God, look at this for a smart money concept trade. Surely that's coming down now because it's just taken the buy side liquidity. It's got to be a sell. Is there any ICT people in? Everyone's run off now. Look, there's only 46 people left. Everyone's gone, no, he doesn't like ICT. There is this guy, Oliver Velez, a cool cat, calls it being FVG, elephant candle. Elephant candle. That's a new one on me. I've got to Google that one. Elephant candle. No, I'm just getting candlesticks. Proper ones. Elephant candle. That's an elephant candle. Trading. Winning candles. Oh, there we go. Oliver Velez. It's a propulsion candle, an impulse candle. It's just a big candle. Strong close. Some people call this a strong close. Tom Hugard calls this a strong close candle. It's just a whacking great buy order. Nothing clever about it. Elephant candle. There we go. What's that? Oh, no, that's a 3 inside down. Yeah, it's a 3 inside down. See, a 3 inside down is an elephant candle followed by an inside bar bear candle. But if you look at that on a 15-minute chart, you find out it's a bearish engulfing. No wonder people get confused in this industry. Just forget about all of that. Flick a coin, press a button, wait for the market to go in your favor, and then get out. Simple. Really easy. That's not ICT, but I got the joke and I like it. Oliver Velez coined the term swing trading. Did he? I've never heard of him. I don't think he coined the term swing trading. They were swing trading in the 1940s. The swing traders jumped out of buildings in the collapse in the 20s. Swing trading is not, I don't know how long swing trading. No, my session's expired. So I'm just going to ask GPT something. Why can't I log in? I've paid for ChatGPT now. I have a proper account. Although it seems to be down. Not letting me log in for some reason. No. Why can't I log into ChatGPT? Oh, there we go. The term swing trading originated in the world of financial markets and trading. It refers to a trading term that is short to medium term swings or swings in the market. The term swing in this context relates to an oscillation back and forth. The swing trading gained popularity in the 20th century. Who invented it? Come on, AI, you should know this. It's stopped. Look, as a trading strategy, does not have a specific inventor. It evolved over time. Blah, 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 blah. I don't think anybody invented the term swing trading. Somebody said it. It's the thing. Somebody said the word at some point, and someone else heard it, and then someone else heard it, and then 3 people spread it. That multiplied by 3, 9 people then knew it. 9 times 9, 81. All of a sudden, everybody calls it swing trading. Swing trading is also called market structure. You're trading the swings in a market structure. All the same stuff, isn't it? Everything is the same. We just rebrand it as something else. Buy, sell. Basically, when the RSI gets down here, you buy it. When the RSI gets up there, you sell it. These are the swings. Really easy. It's not smart. It's not a concept. Anyway, a stud. Is he good looking? Is he? Oliver Valles has a prop firm. He's very big on YouTube. Is he? I haven't heard of him. I've been in this market for 15 years. Never heard of him. What's wrong with his head? Sorry. What's wrong with his head? Okay. 2000. So he's been around for 23 years. Cool. He's an options trader. Yeah. Never heard of him. Writer of the 5 best-selling books, more than 36 years as a professional trader. Honored by NASDAQ. Cool. He sells courses. Anyway, we'll cut it off there because I've got nothing else to talk about, which is why I'm talking crap. Lee, should I go long on Bitcoin? Tamo, absolutely. Seriously, let's have a look at the confluence at the minute because Bitcoin is basically just an index now. So what is Bitcoin doing? Let's have a look. My God, it's not doing a lot, is it? That doesn't really look like any index at the moment. It's more along the lines of the S&P, isn't it? I would say. Or the Dow. It's more along the lines of the Dow look. So I would say that with Bitcoin is now following the Dow by the looks of things, isn't it? So question is, do you think the Dow's are long? Obviously, it looks like it today, but overall, we are rounding top on it. So potentially it might be a short. I wouldn't buy Bitcoin for love or money at the moment. It's just one of those things at the moment where it's died a death. Everybody's bankrupt on it. Yes, it could go up. Yes, it could go down. But at the moment, it's got no volume in it since the crash. And all it's suddenly done is started to replicate what the indices are doing. So when the indices are starting to go up, Bitcoin seems to rally. But why does that happen? Think about what I said earlier. Bitcoin is a cross with the US dollar. When the US dollar drops, the indices rise. When the US dollar rises, the indices drop. So if the indices are going to rise, it means that the US dollar is dropping. So Bitcoin US dollar cross would go like that. Just an index. It's crossed with the US dollar. It's the same as gold. It's another US dollar cross. So it's kind of index linked now to the stock indexes. So I wouldn't really, this is over. We are now just nothing. Crypto's dead. Crypto's like binary options. Binary options came along, everyone went mental on binary options. Then they disappeared. Then crypto came along, everyone went mental on crypto. Next thing they're going to go mental on is something to do with AI. The next thing that comes along will be a boom that you can make money with AI somehow. I don't know how, but that'll be the next thing, won't it? But I don't know. I wouldn't be buying it at the moment or selling it. I just don't get involved in it. I don't know the mechanics of it. Therefore, I can't trade it, because if I don't understand how it moves, I can't pretend to even project where it's going to go in the future. Not that I can anyway, but difficult. Okay, I'll go short. Heads or tails? Long. John Wick says long. So long or go short. Is there any gain days for discount for the system? What? Is there any gain days of discount for the system? Market reversal. I really admire how consistent it is and how potential I really liquidates profits. I don't understand what you mean, Tammy. Given. Are there any given days of discount? Right, got you. Sorry. I thought that was a different language. I'm thinking Geen. I don't recognize that. Is it German? No, there isn't any discounts. No. We speak English, bro. No, there's no discounts. No. Tammy, my indicators sell for $49. If you can't afford $49 for something, how are you going to trade? Don't want to be harsh, but this is an industry you need a bank balance for. And if you can't buy in cheap indicators, inexpensive indicators, cheap indicators don't work. Inexpensive ones are effective. Right, I'm going to leave it there because I'm just waffling now because I'm waiting for the market to do something. I've made all my money today and I'm bored. So 1.5% banked on the H1M5. That's not pound. I was hoping that was going to be pound New Zealand, but it's not. So we're still in that, not going anywhere. Hopefully this is going to drop. I don't think we're going to get any end of day rallies today, unfortunately. Market seems to be pretty flat after the figures have come out. So no real movement up or down. That was pound New Zealand that's just got out. Sorry, pound US dollar. So on that US dollar rally, obviously pounds come down. So that was the H1 entry yesterday. So that was your H1 M5 mean reversion yesterday. Straight in, straight out. Quite probably going to come back down to propulsion. There's a good example of what we were talking about earlier. If you wanted to set the EA to take the trade entries for you, but not get you out automatically, so you can set your own TPs, that's where you would set your TP at an area of liquidity stroke supply demand stroke straight line called support resistance. The smart money area to place your take profit, because there was a fair value gap imbalance wide range bar propulsion elephant candle. Anyway, there you go. Steve, I mean ORB V2. Yeah. I don't know what you're talking about, sorry. The new ORB, is it an update of the existing one? No, It's completely new at the moment. I don't know how. I'm testing I'm testing something new. Yeah, I don't think I can incorporate it into the old way of working. The old market, the old ORB is set to do something very specific, which it does. You can trade the 5-minute pre-market with this absolutely no problem. I'm trying to find a way to do something a little bit more clever with it. But in order to do that, I've had to unpick all of this coding because this conflicts with what I want to do. For me to shoehorn what I'm trying to do back into this is just very, very difficult. I don't think I could. It's just too complicated. It's just the logic's different. I don't know. I'll figure it out. If I do release it as a new product, I'll do it at half price. I'm not looking to make a fortune out of it. I'm just looking to get this thing working so I can trade with it. But obviously, if we can all use it, brilliant. What's the dead for real is Zuckerberg's metaverse. Yeah, that is definitely dead for real. He's pretty much lost the plot, hasn't he? Zuckerberg, I think. Be careful what I say. On YouTube, he might be listening. His AI is probably listening. But yeah, no, yeah, that was a bad idea. That was a really bad idea. I've got a VI headset. I couldn't even find out what the metaverse was. I'll pay full price. I don't mind. Oh, that's nice, Baggy. But yeah, I'm not. What I'll do, I'll tell you what I'll do. Because it's very similar, isn't it? Let's face it. I have used half the code, but I've also stripped out half the code and recoded it. So if I release it for half price, you're getting what you paid for, aren't you? Basically half the code. Makes sense, doesn't it? But it's a lot less powerful than the original version of the opening range breakout EA. But it's more powerful in different ways. So what I don't want to do, and this is the honest truth, is I'm trying to avoid rebuilding something like the opening range breakout, the market reverse alerts EA. When I initially built this, it had this many inputs. Yeah. As I released it and did beta testing on it, people said to me, can you do this? Can you do this? Can you do this? And I said, yep, yep, yep. And look how many inputs this thing's got. Now, I don't use 99% of the inputs in this, but they're there because people asked for it. I released a new version 4, which had all this additional functionality people had asked for, which, to be fair, some of it was actually quite good. But the problem is, this is now over 30,000 lines of code. When you put this in the backtester on the M5 chart, it takes a month to backtest anything because it's got too much code bloat in there. Because even though you're not using all of this, MetaTrader still has to process every line and say, shall I ignore it? Yep. Shall I ignore it? Yep. Shall I ignore it? There's no way of saying, just ignore this massive block because something's set. It still runs through everything and it still slows it all down. And there's certain stuff that has to work on tick. What I'm trying to avoid is making the opening range breakout EA like that. I could easily put this functionality into this EA, not easily, but I could do by having one true false filter that said ignore that all and just use the new version of it, which is exactly the same amount of code, just rewritten with completely different logic. What will happen is this slows down by 100%. It suddenly becomes twice as difficult to backtest anything, twice as difficult to get anything working. And every time I make a change to it and I have to test functionality isn't breaking something else, it takes me twice as long to do everything. So in my view, it's better for me to release something a lot cheaper that I can get out faster than spend 6 months building this. Everybody that asks me to make a change to the market reverse alert CA now, and I still get people saying it, I have to say to them, no problem, I can do that. Are you happy to wait 6 weeks? Because every time I change an input on this, it takes about 2 weeks to test every variation and combination of what that new input can make as an impact on something else. And I'm trying to avoid that because this is an absolutely overcomplicated, over-engineered thing of something that I use very simply, which is to say, When the markets move that far against me and I get one of those, do that. There's 1,000 things in here this thing does that I don't even look at. Someone asked me the other day, I'm trying to test this. Why doesn't it work? I didn't even know where the input was. I had to ask them. I just don't use it. Push alerts. Never use them. I was like, did it even do them? Take a screenshot. I didn't want to take a screenshot. Someone said, can you get it to take a screenshot? So I got it to take a screenshot. All of a sudden, something stopped working. I had to debug for about 3 days why that screenshot suddenly stopped something working. It was a line of code in MP4 I'd never even seen in my life that was conflicting with something else. It's a pain in the backside, which is why I'm trying to keep it separate. Because it's different. It just is different. You just have to accept it. I'm not trying to make loads of more money out of it. I just don't want to overcomplicate my life. Anyway, there you go. There's the honest answer. Lee, why is your backtesting faster? Mine seems to take an hour to run. I've got an i7 high-spec machine, maybe. I don't know. If you're, depends what you're backtesting, what you're talking about. If you're talking about this one, this is the ORB version 2. I'm testing it over 5 months on M5, shorter period of time, maybe. If you're talking about the market reversal alert CA, that's really slow, really slow, really, really slow. This is the problem. This is what I'm trying to avoid, yeah? I'll do it. I'll just load any old set file. I think I've probably got a set file. That one will do. Let's do it on the DAX. Doesn't matter what you do it on. But this is the problem. The more code you have, the more passes have to be made, the longer everything takes. Yeah. So look at the speed of testing here. All right, this is a 1 hour candle. 5 seconds to test 1 hour. If you want to test this over a year, do the maths. Yeah, long time. If we test something like the ORB EA over 5 minutes, you'll get a totally different view of as to how long something takes to test. Look, in visual mode over 5 minute time frame. Look at that. This day gone past, day gone past, day gone past, day gone past. It was taking 5 seconds to do a 1 hour candle on a high time frame with the market reversal alert CA. This is what I'm trying to avoid. Backtesting is the absolute key to strategy development. If you've got an EA that takes 6 years to backtest one setting, you're never going to get a strategy development done. You've got to keep it tight. That's why I'm trying to separate this out into separate things. I want to test, does this work? If it does, brilliant. But to rebuild that all back into the other version is going to take me weeks stroke months to test. CAD-Yen's just hit ADR. Much, much, much faster. Much better. But testing is based, the higher the time frame you test on, the quicker everything is as well, because obviously there's less candles to go through. Which is why this particular strategy is imperative that it's kept working effectively, because I've got to test it on M5. It's a scalping strategy. Scalping strategies are very, very hard to get accurate testing on. Data's key, absolute key. Is there a movie called? There is a movie called Cocaine Bear. Just saying. I've seen that. I saw an advert for that. Basically, a load of drug dealers. They crash a plane or something, and the bear finds their stash of cocaine and starts chasing them in a cocaine rage. Sounds like a great plot for a movie. I think you need to be on cocaine to watch it. Anyway, I'm going. I'll be back on Monday. So, yeah, just sitting in this at the minute. Unlikely we're going to get out of any. Swiss yen might get out of. In fact, it probably is about to close Swiss yen. Just about. 57. Yeah, just about to close that. Literally need a couple more pips on that and we'll be closed on Swiss yen. So that's an in and out straight away. Actually, that's a 2-day. We got in there. Be out on that propulsion. So apart from that, pretty much going to sit in this for the weekend. So we'll see how we get on Monday. Aussie New Zealand, I'm going to start working on aggressive drawdown control, I think, on that on Monday. But as I said, I want to wait for it to get up to the monthly highs. By the looks of things, it could possibly even get there today. We're at 150 ADR pretty much. We've only got to get to 180. So if we get up to there, I might consider taking an aggressive drawdown control position up there. So if you're in Aussie New Zealand, it's very extended, isn't it? So I'll probably look at getting into that. So we'll see how we get on. But I'll be back 7:50 Monday as usual, and 2:20 on Monday. We'll have a look at the DAX, trade the DAX opening range. Obviously, have a look at FX, see where everything is. Yeah, just start again. New week. Have a good weekend. If you need anything, I'll be in Telegram over the weekend as usual. Other than that, back on Monday. So have a good one. See you then.